So my name is Kathy Hume from CHF, and I'm welcoming everybody on this call to the Q3 peak earnings call. And this is a very exciting time. We're getting all kinds of excited comments from everybody here. And what I would like to do is hand over the monitoring of this meeting to Irina. But in the meanwhile, I would like to certainly welcome everybody and say Happy Thanksgiving to all the Americans that we have on the call. I'm sure there's a lot of you. And we appreciate you spending some of your Thanksgiving holiday with Peak. And I'm sure it's been one of your better performing stocks as well. Anyway, I'll leave it at that. Irina, would you please continue?
Yes. Hi, everybody. Welcome to the Peak webinar. I'm just going to dedicate a minute to describing how it will be organized. We will first give the floor to Peak CEO Johnson Joseph and CFO Jean Landreville, who will walk us through the highlights of the third quarter results. Most of you, as I can see, have reviewed the press release already. And this presentation should take about 10 minutes, followed by a moderated Q&A. We will try to keep it short as well. Due to a large number of participants, we will not be unmuting the audience. I hope you understand that, but we will, however, be taking questions in writing. Some of you have already submitted them in advance. Others can leave their questions in a Zoom chat box during the presentation. Please note that this webinar is specifically dedicated to Q3 results, and while we know you might have a lot of good questions related to the company, today we will be focusing specifically on the topic at hand, perhaps with a few deviations. That being said, your questions will not go to waste. The team at CHF will collect them, and they will be answered by the company in due course via direct email reply. And thanks again for your interest in the company. This webinar is being recorded and will later be shared on social media. Now off to Johnson and Jean.
Okay, I'm going to turn it over to Jean in a minute to give the audience an overview of the Q3 numbers. But before we start, as Kathy mentioned, I really wanted to thank our U.S. investors, shareholders, for taking the time out of their busy Thanksgiving holiday to spend a few minutes with us. I promise that we will try to keep this brief. I know there's a lot of turkey to be eaten. There are football games going on. In fact, I'm missing the games myself right now. And I also wanted to let everybody know that when we set out the earnings calendar earlier this year, we had no idea this Thursday would be Thanksgiving in the US. So we apologize for that. It will not happen again. We promise you that. And with that being said, I'll let Jean just walk us through an overview of the Q3 numbers, following which I will give a brief presentation on what the numbers mean for the company going forward. Jean?
Thanks, Jonathan. Welcome, everybody, and thank you to take time to review the third quarter review with us. I'm going to make a really high-level review of for the 3 months period. Revenue target, the revenue record of the quarter at 15.1 million, which is a 10.6 million increase over the same period of last year. So this is an incredible 235% increase, mainly from all our division in China contribute to the revenue, especially the supply chain business with ESDS. So the strategy to put together the ESDS platform with the supply chain is giving dividend, good revenue. At this point, we have an amount of expense that is coming with it because we have to outsource a lot of the revenue, the service that we have to give to the customer in the supply chain. That's why we have an outsourcing service of 15.3 million during the quarter. The other major important expense variance during the quarter is the consulting fees. Two things on that. I think it's a one-time item most of the time, okay, for 400,000. This is to open the market to the other market, to make a penetration in the U.S. stock market and increase in Canada also, and even other parts in the world. So that increased, but it's really a one-time item. The second quarter and the third quarter, I forecast in a lower amount of the consulting fees for the fourth quarter. So this is going to get down sharply for the next quarter. And the good part of that is the expense was paid in share of P share. So there's a lot of content in this part of the city and everywhere in the state and in Canada that are very happy these days with the share price. So they believe in the company. We give them share to give us a service. It's an expense on the P&L, but everybody is happy with it. The result is there. You can see also on the stock exchange expense that is higher. This is our entry into the OTCQX during the quarter, which is part of the strategy. So this is the major variance for the third period in terms of expense. So 15.1 million of revenue, 15.5 million of expense, including the consulting fee, which is a one-time item really. So we have loss of 389,000. That's comparable to 500,000 last year for the same period. So that was my comment, my 5 cents on the P&L. On the equity, just bring your attention on the number of share, which is increased by 23 million during the quarter. And this is directly the private placement that was done in July and August. That's bring $3.7 million to the company, but the number of shares increased by 23.5 million with this private placement. The balance sheet financial position. We'll bring your attention on, because I have some question on this. At the end of September, the company show a cash position of 7.4 million. To make emphasis that a big part of that, 5 million of that 7.3 million was in the ASFC division in China. ASFC is doing loans. So at one point in a time, if the loan is coming in and they were not able to deploy quickly to the market, you're in a cash position. The good thing, as per today, the 5 million is now 1.5 million. So they were able to deploy 3.5 million in loan to work to get some interest higher. So just wanted to point that out. The other part of the story here is on the liabilities. You see the debenture of 3.3 million in the short term. So this is a debenture that is coming in maturity in December. And as per this morning, there was less $1.6 million that was already converted. So we expect that it's going to be very minus a minimal amount at December 15 at the maturity of the debenture that is going to left. I don't think there's going to be a lot of debenture left there at 50 cents. So the conversion is done. We also hit yesterday for the third in a row $1.50 on the market. So there's a forced conversion feature in the debenture. So obviously on the 1.6 left, 50% is already converted as we speak. So after that, it's a $2 level that it's a 100% conversion. So if the stock have finished at $2 for 3 days in a row, it's going to be a 100% conversion. So that was about my presentation about the financial. We're gonna answer a question, specific question. I will.
No, Jean, before we get to the question period, I just want to give a brief overview to the audience in terms of, thank you for the presentation, by the way, Jean. Just want to give a brief overview in terms of what the numbers mean for us. I think it's important for our shareholders to understand the strategy behind the company. First of all, 15 million in revenue may be surprising to the audience, to our shareholders, but it wasn't a surprise to us. We set out, we mentioned that we were expecting 40 million this year. obviously, after the first couple of quarters, we had a quarter. The first quarter was almost $4 million. The second quarter was about $7 million. So obviously, if you're looking at that run rate, you're thinking, okay, how is the company going to reach 40 million? Well, obviously, with the results today, you can start to see why we were expecting 40 million. And I think it's safe to say that we will exceed that $40 million mark by the end of this year. Now, how are we able to generate all these revenues? It really goes back to 2019 when we created that ASC subsidiary specifically to work with the supply chain. Now, we knew that if we started at the very top of the supply chain, and what I mean by that is if we started to work with raw material suppliers, work our way down to manufacturers, and then wholesale distributors, eventually retailers, that was one of the quickest ways for us to acquire a large number of clients as quickly as possible, right? So that's what we set out to do. In 2019, we facilitated, for the most part, transactions between raw material suppliers and manufacturers. Those are fairly large ticket items, but the advantage of that is that these manufacturers, they set out their production schedules for the year, and we sit down and we talk with them and we say, hey, okay, how much do you think you're going to produce of this particular product during the year? How much financing you think you're going to need? And then we base our numbers on that. So that's why we were fairly comfortable. And also we knew what their schedule was, how much we were going to do in the first, second, and third quarter and fourth quarter, right? So that's why we were comfortable with our forecasts, because we knew a lot of our revenues were going to come from the supply chain. So that's why we're not surprised with the $15 million number here that we presented today. And that's why we were also comfortable in the forecast for the following year, right? So there's quite a bit of predictability when it comes to the supply chain. Now, what we're doing with the supply chain, facilitating those transactions between raw material suppliers and manufacturers, those transactions involve oftentimes some logistics, right? So you have warehousing, purchase order, processing, that kind of stuff. We didn't have at the very beginning. We didn't have the equipment, the software to be able to facilitate those transactions. So we outsourced a large part of those services to a company called Rong Yutong. And all of the outsourcing, well, not all, the vast majority of the outsourcing expenses are to that company. But what's happening now is with the reemergence of Gold River, for those of you who are not as familiar with the company, we had a product procurement platform, a very sophisticated platform called Gold River that we kind of like sort of put on the shelf because that platform was originally designed for raw material supplying, raw material processing, purchasing, but in a different sort of way. So when we set out to attack the supply chain in 2019, we knew that eventually Gold River would be able to perform a lot of the services that we outsourced to Rong Yutong. It took a little bit more time than we expected, but now Gold River is just about ready to assume those services. So the large expenses that you now see on our financial statements related to outsourcing should begin to diminish dramatically, which will leave the company to be a lot more profitable than it is today. Now, in terms of working our way down the supply chain, the other encouraging part is we are now starting to see we're working our way down the supply chain, and we're now starting to process transactions between distributors and manufacturers, and a few transactions between retailers and manufacturers and distributors. Obviously, those transactions, we expect those transactions to create a larger volume for us and also to be more profitable, because those transactions will more than likely not require warehousing, logistics, and some of the services that we're currently outsourcing. So this is the story essentially behind the numbers that you see today. And obviously, we expect those numbers to continue to grow over the next few quarters with the supply chain vertical. But as some of you know, with the deals that were recently that were recently announced by the company, there are going to be more distributor deals happening, which will give the company a little bit more in terms of profitability as well. So that's the wrap up that we have behind the numbers. Also, last thing I want to mention is the consulting fees that were incurred during the third quarter. There were a high level of consulting fees, advisory fees. As Jean mentioned, we paid for those fees for the most part in shares or warrants or options. But those fees were necessary to help better position the company from a capital market standpoint, which we're all benefiting from right now. And also, we've started the process to eventually bring profits from China to Canada. So we had to incur some expenses on that end as well. So those are the large expense items, and I felt that it was important for everybody to understand where they are and why they're going to be fading away, so to speak, over the next few quarters. So that's it for me, Irina and Kathy. Now, if you want, we can open the floor up to some questions from the audience.
Yeah, I do see a lot of questions about outsourcing costs. You know, they will be decreasing, but I think you kind of addressed it. If you want to just, you know, one or two sentences, like you explained why they are so high, but will they be eliminated? That's the question.
I don't think the outsourcing expenses will be eliminated entirely, because Rong Yutong specializes in certain things, right? They provide warehousing services, they provide shipping of materials. We don't ever want to be in that business, but the parts that are, believe it or not, that are the most valuable right now, the most expensive, have to do with the software, the system that they have. It's not ideal, to be honest with you. The Gold River platform that we have right now is better suited, in our opinion, to provide those services. So most of those expenses will be assumed by our AST subsidiary through Gold River. So to answer the question, the outsourcing services are not going to be eliminated entirely, but they will be reduced dramatically because we're going to be assuming the most important part of them.
Okay, that's good. So that is a question. Does the company still expect to meet guidance of $4 million EBITDA in 2020?
That's a good question. As I mentioned, we're a little bit behind schedule when it comes to getting Gold River to assume the services being outsourced. So the fact that we had to continue to outsource a little bit more than anticipated, I think we will probably miss the EBITDA number for 2020, but we will certainly, I believe, make up for it in 2021.
Okay. That's actually the question related to Q3. I hope I pronounced the name of the platform correctly. How much is it Jin Xiaoer?
Jin Xiaoer.
Jin Xiaoer, close. Platform contribute to overall sales?
It's hard to say because right now we are still revising Jin Xiaoer's revenue model. Keep in mind that Jin Xiaoer was a platform that we acquired, right? It had its own revenue model before we acquired it, and that revenue model did not fit into the grander schemes of what we want to do with the Cuba Lending Hub platform. So although Jin Xiaoer is being used right now to submit loan requests to the platform, Jin Xiaoer itself is not yet charging for those services. So in terms of revenue, indirectly, Jin Xiaoer, I would say, made a significant contribution because even the supply chain clients, some of them were submitted through the Jin Xiaoer platform, but because we have not yet finalized the revenue model for Jin Xiaoer, no revenue was recorded under the Jin Xiaoer banner per se.
Okay, that's, let's see, let's jump into something else. How many Chinese cities does PIC expect to have a presence in by the end of 2020?
Okay, that's another place where, I would say, unfortunately, our target was to be in 20 cities. It looks like we're not going to be in 20 cities by the end of the year. Yeah. But that will not affect, obviously, the revenue that we're going to be generating for this year. in 2020. So our approach has been more on developing the supply chain vertical, and also the deals that we're working on right now with distributors and potentially some larger retailers. That has been more of a focus for us this year than it was basically to expand via the Jin Xiaoer service centers. That doesn't mean that we will abandon that. We did add 2 cities in the third quarter. There will be more cities added in the fourth quarter, but we will likely not have 20 cities by the end of the year. It'll likely be more, I would say 12 to 14, maybe 15 cities by the end of the year.
Oh, that's good. A lot of the people are asking about the updated financial forecast, when they can expect it.
Okay, yeah, well, I would say that one of the reasons why, the reason we have not been able to put out guidance and the new forecast should be seen as a positive sign for our shareholders, because I think there was a lot of excitement with the BDC deal that we announced a few weeks ago, and the BJM deal also announced maybe like a week and a half ago. We're working on more deals, right? So between now and the end of the year, in all likelihood, there will be similar deals, which will have an impact on our numbers going forward. So we're waiting to see what happens with a couple of things that we have, let's say, in the air right now that could potentially happen between now and the end of the year. Once those things are finalized, then we're going to be in a better position to provide guidance for 2021 and beyond. There is also the fact that the BDC deal itself just started, right? So we announced a couple of weeks ago that we had our first transactions. So it's going to be very important for us to monitor the adoption rate in the program to give us a better idea in terms of what we can expect for the next 12, 18 to 24 months from each of these different programs that we're implementing. So Jean and I were just discussing this before we came on this call. We anticipate that perhaps early 2021, I think our investors and shareholders could expect us to come out with some revised numbers that we feel fairly comfortable about.
When does the company expect to be making profit, meaning earnings positive?
That's also an excellent question. Certainly, we right now we're not going to advance a specific quarter, but certainly before the end of 2021, we expect 2021 to be a profitable year for us. Hence why we are putting mechanisms in place to be able to bring back profits from the country before the end of the year, right? So I would say by the end of 2021 is a very reasonable expectation for us to be profitable.
Okay. What about warrants? Once all warrants have been exercised, how much cash this would bring to peak?
Jean, I think I'll let you take that one because Jean's more is following the warrants more than I am. Jean?
There's a lot of warrants that I think is going to be converted before the end of the year, beginning of next year, because there's some warrants at 25 cents right now in the market, which is a big part of it. So it's 70 million that was on the market at 25 cents. So it's made a calculation. It's $2 or $3 million at least in the next weeks or months within the warrants. We have the warrants with the debenture that's going to be converted with the debenture, and there's also the same amount of debenture originally at 80 cents with this debenture, so it's 7.8 million. So this one at 50 cents, so 0.5 million. This one, I don't have any control of when people are going to convert, but I think the chances are very good that the conversion will be quite fast with the share price, the actual share price.
Okay. Multiple questions about another offering, and further dilution. Will there be any financing prior to the end of 2020 in the near term?
Prior to 2020, I can safely say that no. I really want to speak to the questions about financing that our shareholders have been asking. Every time we do a financing, if we do a financing in the future, keep in mind that every such financing will be because of growth opportunities that the company has. We would be building equity in the company, and we would be increasing revenue considerably. So also, we talked about uplisting the company to the NASDAQ. Obviously, if you're in a NASDAQ, there are more expenses associated with that. Insurance, there are all kinds of fees that will go up with the NASDAQ listing. And typically, if you're going to do an uplist on the NASDAQ, it's not out of the ordinary for you to do a raise, right? You have investment bankers in the US. You kind of like have to have like a financial team and financial partners on the US side as well. So I would say that with a NASDAQ listing, in all likelihood, there will be a financing. But again, rather than see any financing from the perspective of dilution, I think our shareholders from this point forward should look at financings as growth opportunities and for the company and building equity for the shareholders. So financings should not be perceived as a negative thing, but rather positives for the company. That's my opinion.
There are a few people asking as to what is, the goal of getting profit back into Canada, the process, how it will be done from China.
Well, the process itself, there are prescribed rules by the government that are put into place. You just have to follow the rules. There are experts both in Canada and in China that have done this hundreds, thousands of times for other clients. We're working with some of them right now. We were actually aware of these things before we created the structure that's in place right now. So we have operating subsidiaries in mainland China. We have a holding company in Hong Kong through which any profits would flow through first for tax reasons, for I guess all kinds of reasons as well that I'm not going to get into right now. But we did our homework. We structured the company the right way. Now there are certain documents that need to be filed, and there's a timing in which these documents need to be filed. So those are the things that we've started to do in the third quarter, working with advisors, particularly in China, to get that into place. Now, the second part of the question, why bring profits from China to Canada? Purely, we've gotten that question a number of times, right? Like, I mean, we've heard from shareholders that kind of like see China as a black box, right? Money goes in, it never comes back out, right? So we want to dispel that myth and show people that if you follow the rules, you follow the processes that are in place. And by the way, the governments at different level have been working with us from the very beginning, and to make sure that we're going to be able to do that. So we want to show people that China is not a black box. If you follow the rules, you can do very, very good business in China. So that's number one. Secondly, who knows down the line, right? Like, I mean, dare I say, dividend, it's not something that we're mentioning right now, but eventually down the line, who knows, right? So the investors, that have invested in this company, if they want to be rewarded. So that's something that we can look at down the line. So for those reasons that I mentioned, making sure that we're able to do that, proving to investors that we can do that is primarily why we want to do it.
Well, there are many people asking this question. It's up to you if you want to answer that or no right now. If not, we will email the reply directly. But of course, there's like 10 people asking about this new deals with BDC, right? And the service fees and percentage of the credit amounts facilitated versus percentage of the annualized interest rate charged by the lender. Do you want to address it quickly?
Okay, yeah.
There's like 15 people emailing
okay.
about it.
Okay, since this is this call really is about the third quarter results, The BDC deal, the BJM deal, those are fourth quarter events. So technically, like, I mean, we wouldn't want to discuss those programs or whatever those deals right now. But I understand that I was partly responsible for creating the confusion. I realized that after speaking to Jean about it. Okay, so as a rule, first of all, okay, the platform itself does not charge interest, right? So I want to make sure that everybody understands that. So all we're doing when we talk about interest, we're trying to equate something that people can use to estimate what we are earning from these projects. But that being said, it's more 2% of the value of the credit that is awarded. It's not 2% of the interest rate. So I realize I may have misspoken or said things that led people, like, you know, that were a little bit confusing. One particular transaction that we did, the first transaction is related to the BDC deal, where I equated the fees to the percentage of the interest rate charge. That was actually a case where it was both, right? So the fees that we earned were both related to the value of the credit provided and the interest rate charged by the lender. So we will clarify that in the future, but as a rule of thumb for people out there, it's more 2% of the value of the credit that is awarded, not the interest rate charged by the lenders.
Okay. And this is a question directly related to the quarter. What was the amount of one-time expenses in the quarter? Why doesn't company calculate adjusted EBITDA by adding back one-time expenses like other companies do?
Well, that's a choice. It's a one-time item like consulting fees. Some presented that into the adjusted EBITDA, but for me, it's not like an impairment, which is very likely. But this was business decision. We not pay in cash. We pay with share, but it's an expense. So I don't think it's for me. It's not clear that we can adjust the EBITDA for that.
Okay. Last question. Let's do a last one. Do you have a timeline for listing on NASDAQ? You know, and do you have plans to uplist in Canada, you know, to be listed on TSX, for example?
Yes, absolutely. First of all, yes, an uplist to the TSX exchange is something that we want to do. Hopefully by the end of 2021, if we have anything to do with it, ideally it would be first half of 2021. As far as the timeline for NASDAQ, we're monitoring the share price right now. The share price being above $3 is one of the last remaining criteria for us to qualify for the NASDAQ. So that will determine when we actually submit our application for the NASDAQ. But definitely this is something that we are pursuing. We started to, I guess, prepare some of the documentation that would be required in order for us to submit the application. The disclosure information. We started to have discussions with our securities lawyers about that. So typically, once you submit your application on the NASDAQ, I believe the process is 3 to 4 months, if I'm not mistaken. So if we were to submit an application before the end of this year, then you're looking at perhaps end of Q1, maybe early Q2. For us to be listed on the NASDAQ. So that's what we're looking at approximately.
Okay. So before I let you finish, you know, with closing remarks, I'd like to thank everybody as well, you know, for submitting your questions. We will have transcript. There are a lot of messages, and if your question hasn't been answered, please, I would prefer that you send it directly, not in the chat because it's very long chat right now, but directly to CHF Capital Markets or Johnson, but Johnson would prefer that it's sent to CHF Capital Markets. Right, Johnson?
Yes.
So,
Yeah. Can I just before we wrap up, Irina? Yeah, that's a nice segue. If I may take the opportunity to kind of like do a public service announcement here for everyone who has sent me emails the last, I would say like 3 weeks. I apologize. I'm usually very good at replying to emails, but lately I've just been swamped and my inbox is totally backed up. I have over 500 unread emails in my inbox as we speak. I'm going to try to get through some of them over the weekend. But again, listen, I appreciate all of the emails. And as you know, I like exchanging with shareholders and investors. So by all means, don't stop sending your emails. But if you have something that can be answered by CHF Investor Relations, please send them to CHF, Kathy, Thomas, Irina. It'll be their pleasure to answer your emails. But for those of you that have already sent emails and have not received a reply yet from me, bear with me. I'm going to work through my emails over the weekend and the coming weeks, and I will do my best to get back to you. So,
great.
just be patient. Thank you. And one last word, if I may. Thanks again to everybody for attending, to our U.S. friends for taking the time. Happy Thanksgiving to all of you, and enjoy the turkey and the football games. I'm going home right now to watch them myself. Thank you.